Welcome back to another video, everybody. We have a lot to discuss here. Tom Lee has made yet another round of very bold statements about the market as we head into the summer here. We're going to play the clip, break down everything that he's saying so that you guys as investors and market participants can have a much better view of what to expect moving forward, because there are some very important developments happening today that everybody needs to be aware of. And again, as always, we are going to be going over some of the most relevant pieces of news on some of your favorite stocks as well. And I also forgot to mention, Tom Lee just came out with about a $3 million price target for Bitcoin. We're going to be talking about that in this video as well, guys. But before we get into all of that information, if you guys do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you're subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. And as always, massive shout out to all of the members of my private trading and investing community, Less Trades, More Profits. Again, you guys know the deal. This is the last month that you guys are going to be able to take advantage of the best sale that I will ever offer. 50% off your first 2 months with code May with that link down below there. Again, it only comes out to $1 a day. If you guys want to take full advantage of everything the market has to offer from a short-term trading perspective and a long-term investing perspective, we'd love to have you in there. But without further ado, let's roll the Tom Lee clip and get right into it.
Tom, are you thinking through this in sense of kind of what path tariffs are ultimately going to take, or can you kind of look beyond that now at some point and just say it's just not going to amount to enough that it derails the market from rallying?
It's a little bit of both. I mean, I think in the near term, of course, the visibility on tariffs has gotten messier because now we have the judicial system weighing in on what can be done and the response from the White House. But because I think the scope of what can be accomplished with tariffs has actually shrunk, it means when we think outside the next couple of months, I think that ultimately it's pushing us closer to a resolution, because now the bid ask between like what other countries might accept versus what the White House is trying to achieve is actually shrinking. And that gets us closer to the end game. So I think this is actually a net positive for stocks. And I can understand why markets are confused. But to me, I think the equity risk reward is still better today than it was in February 2025 when the S&P was at its old highs.
Right.
Now, the most important thing that is starting to happen right now in the market is that we are seeing a new narrative starting to play out here. After we saw that pretty aggressive V-shaped recovery, markets have been consolidating right around their recent highs, really for the last week and a half here, as they wait for more clarity on what's going to happen next. Now, we did have some more uncertainty introduced to the market last week with a couple of these court rulings trying to block some of these tariffs here, but that court ruling is actually what's going to serve to kind of speed up the process here to getting towards some of these finalized agreements, because again, you have heard a lot in the past this taco situation with this new administration, specifically Donald Trump, and that this new court ruling does provide the ability for this administration to get on the off-ramp here, and that's exactly what we are starting to see today. The Trump administration wants countries to provide their best offer on trade negotiations by this Wednesday, as officials seek to accelerate talks with multiple partners ahead of a self-imposed deadline in just 5 weeks, according to a draft letter to negotiating partners viewed by Reuters here. So again, we are seeing this process on these trade negotiations speeding up, and that is exactly what this market wants to see. They want more clarity on a lot of this trade policy, and we should get some more new information about that over the coming days and weeks. And in addition to this, we also have Trump saying Japan wants to make a trade deal. We're dealing with India, we're dealing with Pakistan, and the Pakistan representatives are coming next week. And the big one that a lot of people are worried about, that are continuously wondering what is going to happen next with this potential trade deal or series of trade deals coming out with China. Trump and Xi expected to speak this week, very soon, not today. So we are seeing the development of these trade talks really speeding up. And it does look like, maybe not right now in the present, that they are fully getting on this off-ramp here, but they are starting to, let's just use this metaphor, change lanes and getting closer to getting off that exit. And what we also have to think about here are how are some of these new developments going to affect Fed policy and the tone of the Federal Reserve moving forward. They've been very cautious, very hands-off over the last couple of months here. And again, everybody's been worried about this massive inflationary spike that a lot of these economists were projecting, but we really haven't seen that at all. Again, looking at some more data here, the New York Fed's measure of inflation persistence, the multivariate core trend rate ticked down to 2.7% in April from a downwardly revised 2.8%, previously 3%. In March, this is the lowest since December 2024, and we've also seen all of the other inflation metrics too, PCE, CPI, PPI, on nice downtrends over the last couple of quarters here. Now, what we also have to think about is, yes, we do have inflation moving down. We have some risks still with inflation maybe ticking up with some of these potential one-time price increases as a result of some of these tariffs here, but we also have to think about growth. Right now, we are seeing the Q2 GDP estimates out of the Atlanta Fed massively moving to the upside here. The latest estimate right now is 4.6% in the second quarter here, which is very, very significant, especially coming off of that negative 0.2% print for the first quarter of 2025 here. Now, again, going back to that inflation point, we also have Fed's Goolsbee saying today, so far we have had excellent inflation reports, surprisingly little direct impact of tariffs. So what the Federal Reserve is going to need to see in order to start moving or to take a more dovish stance when it comes to what they're thinking for rate cuts in the future is obviously more clarity on what's going to happen with trade. But as we saw earlier in this video, we could easily see a lot more of these developments coming a lot faster in a greater number than the market was thinking was going to happen previously. Now let's move into some of these individual names here. I want to first talk about Bitcoin and MicroStrategy before we move into Palantir, Tesla, and HIMS here, all with very important developments that I think are notable that we need to talk about in this video here. Again, that Tom Lee clip is pretty insane, but let's hear it from him before we start breaking everything down.
What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But now I think, what are we, 104 this morning, so it's pulled back.
Yeah, I think it's consolidating. It makes sense. You know, Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year, so that's a tailwind for Bitcoin. But, you know, Bitwise has a great stat. You know, 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your like 150 target?
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's, I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be, you know, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, you know, Bitcoin could be 2 million, you know, 3 million long term. I mean, even higher.
Now, just taking a look at the chart here on Bitcoin, I would not be bullish short term, very short term over the next couple of weeks here with Bitcoin here, just based off of this chart here. Again, Tom Lee in that clip there is laying out a thesis that could take 5 to 10 years to play out in order for Bitcoin to go from this 104,500 level up into the millions. And again, with this new incredibly friendly crypto friendly administration here, and again, with so much more adoption of these cryptocurrencies around the world in the United States, I think Bitcoin has a very, very high likelihood of moving significantly to the upside in the future here. But again, just looking at this chart in the short term, we have a nice push to the downside, period of consolidation. If you do end up breaking down out of this little bear flag setup here, you could come down and test this $100,000 level. This could end up turning into a head and shoulder setup where we end up pushing down even lower. But again, a lot of this is going to really be dependent on what is going to happen in the global marketplace with a lot of these new trade talks. Yes, we have a potential bearish setup on Bitcoin here, but this easily could get invalidated to the upside after a couple of really strong days in the market here. But just looking at this chart, not looking really, really solid here yet, in my opinion. And again, when we take a look at something like MicroStrategy, which is going to move basically in lockstep with Bitcoin, again, another bearish setup on this chart here. If we do end up seeing that push down, we could easily come down to that 343.50 area before price starts to slow down, before kind of maybe turning back to the upside. Now, moving on a little bit and talking about Palantir, another name that, again, has been very, very successful for retail investors over the last couple of years here. This was one that I outlined for that Less Trades Profits community that I run for you guys at 15. This has been an absolutely awesome winner for everybody here. Now currently trading at $131 and about 70 cents here. Again, what we'll be looking at on Palantir over the next, really over the last couple of weeks here. Nice consolidation right around these prior all-time highs. If we broke above this kind of 128 area here, we easily could see this push higher. Today, we did make new all-time highs here, but we haven't necessarily seen that follow through yet. Again, is all going to come down to what the overall market wants to do. But again, this is one, guys, that I would not buy right now, but I definitely would not short. This one is still commanding an absolutely insane valuation out of in the market right now. Just be careful this one. Again, this is one that if you were in it when I was talking about this one at $15, awesome, good for you. You guys are sitting on absolutely insane gains. But if not, I think there's going to be a lot better opportunities out there for new positions. Now, again, we also saw some interesting comments here from Martin Shkreli as well. Shkreli projected the company could achieve $16 billion in free cash flow within 5 years, potentially justifying a $1 trillion valuation. And again, Palantir currently has a market cap of $310 billion. So that would be about 3x upside from where we are currently trading right now. Again, I think that's very aggressive, but this is a name that has been getting a lot of love from retail investors and is now starting to see a lot of institutional interest as well that could easily continue to push price higher in the short, medium, and long term. Now, moving on here, let's talk a little bit about Tesla here. So Tesla has had a very, very solid move to the upside after those April lows. We had some awesome trades on this one here, especially this one with this break of around 294.50. Shout out to all of you guys that are in the Less Trades, More Profits community with us. I know you guys are making some absolutely epic gains off of this Tesla move to the upside here. But Tesla now is starting to look like it wants to shift to the downside in the short term here for one very specific reason. Again, I know a lot of people that are very bullish on Tesla over the long term like to use this phrase that Tesla is not a car company. Well, sorry, I hate to break it to you when about 75% of your revenues comes from car sales. Again, that makes you a car company. And when we see data like this, Tesla sales plunge 67% to an almost 3-year low in France. Again, these European sales numbers coming out for Tesla are not great, but what I will say, the little silver lining in all of this is that Elon Musk is now coming back. After his time at Doge has kind of expired here, he is leaving his role in the United States government here, coming back to fully focus on a lot of his businesses. I think there's a pretty solid likelihood that Elon is going to be able to come in, be able to turn this around here, and be able to kind of lead the way forward with Tesla going into the next couple of years here. But again, what you have to realize is a company that is generating 75% of their revenues from car sales is a car company, so that data is very, very important, and having really not great delivery numbers coming out in some of these countries is definitely not going to be helpful for moving Tesla up in the short term. Now, last up on the list for today is going to be HIMS. So remember, we did have that potential short-term bearish setup forming on HIMS here. If we were to have broken down below that $51.30 area here, there was a high likelihood that HIMS was going to trade lower in the short term here by, I think, a pretty decent amount. Now, that's not what we ended up seeing happen. We invalidated that to the upside. So, again, nothing to really do on this one from a short-term trading perspective, but kind of stays the same with everything else that I've been saying about this one. I still do not think that it would be a smart decision, just kind of from a repeatable approach to the market standpoint, to be going out and buying shares of HIMS at these levels here. Remember, this is one that I was outlining for the group down at this $30 to $31 area here. If I like a stock at 30 to 31 and it is now trading in the 50s and even in the 60s, and people are asking me my opinion on it, again, I liked it at 30 to 31. We saw a really nice move to the upside. I really wouldn't be doing anything new with this name right here in the short term. But again, this one could easily see a lot of growth in the future. Anybody that is already in this one, again, look at your gains, be happy with them, and continue to keep up with the news here. And one of the main pieces of news that we did see on HIMS here over the last couple of days was that they're going to be cutting 4% of their workforce amid the ban on weight loss drug copies. Now, to me, this is really a nothing burger because everybody knows that compounding is ending here. Telehealth platform Hims & Hers will cut 68 employees, or about 4% of its workforce, as it adjusts to a US ban on manufacturing mass copies of the weight loss drug Wegovy. But remember, Hims now has a long-lasting partnership with Novo Nordisk. They have some significant discounts coming out to new customers of Wegovy here in an effort to try and transition some of their customers that were using some of these compounded weight loss products to getting over to the Hims product. So I don't really, or the Novo Nordisk Wegovy product. So I don't really think that this one is going to have really that big of an effect here. And they will actually save a little bit of money here on the salaries that they were paying these individuals here. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you're subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.